The Basics of Investing, a beginner's guide to building wealth. Hello everyone, welcome back to Raveling Money. If you've been paying attention, you know that we want you to take charge of your money and make better choices with it. The basics of investing is what we are talking about today. This may actually help you grow money over time. Investing could seem scary at first, but it doesn't have to be. I'm going to explain what investing is, why it's important, and how you may get started in this video. Let's get started. What does it mean to invest? Let's start with the basics. What does it mean to invest? In short, investing means putting your money into something with the hope that it will grow over time. Instead of just having your money sit there, you're putting it to work. It's like putting a seed in the ground and letting it grow into something bigger. Investing might mean putting money into stocks, bonds, or real estate. It's not about getting rich quickly, it's about consistently building your wealth over time. Why should you put money into something? One important cause is inflation, though. Prices for commodities like food, petrol, and housing go higher over time because of inflation. If you just store your money in a savings account, it's actually losing value slowly because the interest rate is usually lower than inflation. Here's an example for you. Think about how much money you have saved up. $1,000. The inflation rate is 3%. If your savings account only pays you 1% interest, your money is worth less than $1,000 in real terms after a year. Investing gives your money a chance to grow and beat inflation. That's how you keep your money safe and grow it over time. Different kinds of investments. Now, let's speak about the kinds of investments that people make the most. You don't need to know everything right now, but here are the basics. Shares. Stocks let you own a piece of a corporation or company. When you acquire stock, you own a small part of the corporation or company. The value of your shares can go up if the company gets bigger over time. Apple is a well-known example. If you had bought Apple stock 10 years ago, it would have gone up a lot. Bonds. Bonds are a way to lend money to a business or government. They give you interest for a fixed amount of time and then give you back your original money. Bonds are usually safer than stocks, but they also pay less interest. Property. Investing in real estate means buying land or buildings to rent or sell for a profit. Real estate can be a steady method to grow your money, but it needs a bigger initial investment and is tougher to sell fast than equities and bonds. These are just a few examples, but the point is to choose investments that fit with your goals and how much risk you're willing to take. How to get started with investing. So how do you really get started with investing? The good news is that it's easier than ever to get started, even if you don't have a lot of money. Here's a simple way to do it. Step 1. Make a list of what you want to do. Think about why you're investing before you do it. Are you putting money down for retirement, a house, or just growth throughout time? If you know what you want to achieve, it's easier to choose the correct assets. Step 2. Make a safety net. Make sure you have an emergency fund before you start investing. It's important to have at least 3 to 6 months worth of living expenses saved up in case something unexpected happens. Step 3. Begin small. You don't need a lot of cash to get started with investing. It's actually a good idea to start modest, especially if you're new. You can start with index funds or ETFs that don't cost much. These are funds that let you put money into a lot of different companies, which lowers your risk. For instance, when you buy an index fund, you buy a small part of a lot of different companies at once, which lowers your risk. It's a terrific method for people who are new to investing to get started without having to choose specific equities. Step 4. Keep it up. Investing is a long-term game. Even if it's only $50 or $100, set up automatic payments to your investment account every month. Over time, the steady flow adds up, and compound interest works its magic. The power of interest that compounds. Compound interest is one of the most important ideas in investing. This means that you get interest on both your original investment and the interest that your investment has already earned. Let's say you put $1,000 into an account that earns 5% interest every year. After a year, you will have $1,050. But the next year, you'll get interest on the whole $1,050, not just the $1,000. This effect really builds up over time. The more time you have to take advantage of compound interest, the better. Over time, even small investments made regularly will gain a lot. Things you should not do when investing. Before we finish, let's talk about several blunders that new investors often make. Trying to guess when the market will go up. Some people try to purchase and sell based on predictions. That only lasts a short time. But really, no one can know what the market will do. Stay invested for the long term is the key. Putting money into solely risky assets. It's easy to want to make riskier investments, especially when you see significant returns. But keep in mind that high-risk investments might potentially lose a lot of money. You should add safer investments like bonds and index funds to your portfolio to make it more balanced. Putting money into things without a plan. Making mistakes might happen when you invest without defined goals. Make a plan that shows your goals, how much risk you're willing to take, and how long you want to reach them. This will help you stay on track and make smarter choices. That's all there is to know about investing. Investing isn't about getting rich quickly. It's about letting your money grow over time. You may create wealth over time by starting early, being consistent, and spreading out your investments. Keep in mind that investing is a journey, not a race. Begin with tiny amounts, learn as you go, and see your money grow over time. Please like this video, share it with someone who is ready to start investing, and leave a comment below if you have any questions or recommendations of your own. And if you haven't already, make sure to subscribe so you don't miss any more suggestions on personal finance. I will see you in the future video.